Welcome to XM.com for today's daily market comment by Rafi Boyajian. I'm Cristina Marujos. Fed speakers came out in droves on Monday to reinforce the central bank's position on the flare-up in inflation that's driven markets into speculation overdrive about the timing of when all the stimulus will be withdrawn. Fed Governor Lael Brainard said she expected price pressures associated with supply chain and bottleneck issues to subside over time, while St. Louis Fed President James Bullard didn't think it was time to talk about changing monetary policy. One of the Fed's more hawkish voices, Esther George, however, was a little more cryptic, saying she does not dismiss the risk of higher inflation. On balance, though, markets are now even more convinced that the Fed will stick to its current policy path, no matter how shocking the inflation data is over the coming months. The Fed's renewed campaign to talk down the inflation threat just days before the core PCE price index has dampened the chances of a big market overreaction to the data on Friday. U.S. Treasury yields extended their decline on Tuesday, and yields globally slipped as well, including in the Eurozone. Nevertheless, it was the U.S. dollar that bore the brunt of the slump in yields in FX markets as the positive mood favored riskier currencies. The dollar index slid to its lowest in nearly 5 months, driven mainly by a surging euro. The single currency was the biggest gainer today, climbing to around $122.50. The pound was up too, but struggled to reclaim the $142 handle. The risk-sensitive Australian and New Zealand dollars lagged slightly amid a drop in key commodity prices. China warned on Monday it will not tolerate excess speculation by commodity traders, which is being blamed for fueling the price of raw materials such as iron ore, copper, and steel. It's unclear if the measures taken by Chinese authorities to curtail soaring commodity prices will bring about a sustained pullback or only short-term relief, but it does appear to have buoyed equity markets, and specifically growth stocks. China's CSI 300 index jumped by over 3% today, and shares in Europe opened sharply higher. On Wall Street, the tech-heavy Nasdaq Composite gained the most, rising 1.4%, while the Dow Jones closed up just 0.5%. U.S. stock futures were last up between 0.25 and 0.50%. This was the Daily Market Comment. Thanks for watching at XM.com.